It was a day for the record books, but not the kind Tesla or its CEO, Elon Musk, envisioned. The day started like any other, with the usual hustle and bustle of the stock market. Investors were optimistic, and the tech world was buzzing with anticipation for Tesla's next big move. But as the hours ticked by, the mood shifted dramatically. On a seemingly ordinary Tuesday, Tesla's stock price plummeted, wiping out a staggering $126 billion in market value in just 24 hours. The drop was so sudden and severe that it left even the most seasoned traders in shock. The numbers on the stock ticker turned red, and the once confident faces of investors turned to expressions of disbelief and concern. This wasn't a gradual decline, it was a freefall, the kind that sends shockwaves through Wall Street and leaves investors reeling. Phones rang off the hook, and trading floors were abuzz with frantic activity. The atmosphere was electric, charged with a mix of fear and urgency. Everyone was trying to make sense of what was happening, but answers were hard to come by. The question on everyone's mind: what went wrong? Analysts and experts scrambled to piece together the puzzle. Was it a technical glitch, a market overreaction, or something more sinister at play? Theories abounded, but concrete answers were elusive. The answer, as with most complex situations, wasn't simple. It was a tangled web of factors, each contributing to the perfect storm that had engulfed Tesla. The company's meteoric rise had always been accompanied by a certain level of risk, but this was unprecedented. A confluence of factors had been brewing, creating a perfect storm that finally broke over Tesla's horizon. Economic uncertainties, geopolitical tensions, and internal company challenges all played a part. The storm clouds had been gathering for some time, and now they had unleashed their full fury. From Elon Musk's increasingly controversial political stances to the rising tide of Chinese electric vehicle manufacturers, the pressure had been mounting. Musk's outspoken nature, while often seen as a strength, had also made him a lightning rod for criticism. Meanwhile, competitors from China were making significant strides, challenging Tesla's dominance in the electric vehicle market. This wasn't just another dip in the market, it was a stark wake-up call. Investors who had ridden the wave of Tesla's success were now faced with the harsh reality of its vulnerabilities. Meetings were held behind closed doors, strategies were re-evaluated, and the future seemed more uncertain than ever. Tesla, the darling of the tech and automotive worlds, was suddenly vulnerable. The company's innovative spirit and ambitious goals had always set it apart, but now those same qualities were under scrutiny. Could Tesla maintain its edge in an increasingly competitive landscape? The question loomed large. The company that had once seemed invincible was now facing a very real and very public reckoning. Media outlets around the world covered the story extensively, dissecting every detail and speculating on what might come next. The public too was captivated, watching closely as the drama unfolded. The road ahead was uncertain, and the stakes couldn't be higher. For Tesla, this was more than just a financial setback. It was a pivotal moment that would test the company's resilience and resolve. The journey forward would be challenging, but it was also an opportunity for reinvention and growth. Only time would tell how Tesla would navigate this turbulent chapter in its history. The immediate aftermath of the stock plunge was palpable. The numbers on the screen told a story of sudden and dramatic loss, a narrative that was unfolding in real time. Investors, analysts, and even casual observers could feel the weight of the moment. Panic selling ensued as investors, both large and small, rushed to cut their losses. The trading floors were a frenzy of activity, with brokers shouting orders and phones ringing off the hook. Online trading platforms were overwhelmed with the sheer volume of transactions, as everyone tried to offload their shares before the situation worsened. The financial media went into overdrive, dissecting the day's events and speculating on the future of Tesla. News anchors and analysts debated the causes and potential outcomes, each offering their own perspective on what this meant for the company and the market at large. Headlines screamed of a crisis, and the airwaves were filled with expert opinions and dire predictions. Was this a temporary blip, a correction in an otherwise overvalued market? Or was it a sign of deeper problems within the company? Analysts were divided, with some suggesting that this was a natural market correction, while others warned of underlying issues that could spell trouble for Tesla's future. Investors were left to ponder these questions, unsure of what the next move should be. The impact wasn't limited to Wall Street. The tremors were felt globally, as international stock exchanges reacted to the news. In financial districts around the world, the mood was tense, and the uncertainty was palpable. People walked past Tesla showrooms with a sense of unease, wondering what the future held for the electric vehicle giant. Tesla employees, many of whom hold stock options as part of their compensation, watched their portfolios shrink in real time. The factory floors and office spaces were filled with anxious faces, as workers checked their stock prices and worried about their financial futures. The decline in stock value was more than just a number. It was a direct hit to their personal wealth and security. The uncertainty bred anxiety, casting a shadow over the company's workforce. Conversations in break rooms and offices were dominated by concerns about what this meant for their jobs and the company's future. The once optimistic atmosphere had turned somber, as employees grappled with the new reality. The sharp decline in Tesla's valuation sent ripples throughout the entire electric vehicle market. Competitors and industry analysts watched closely, knowing that Tesla's fortunes were closely tied to the perception of the EV market as a whole. The drop in Tesla's stock was seen as a potential indicator of broader challenges facing the industry. Investors, once bullish on the industry's potential, began to question their assumptions. Meetings were held, strategies were re-evaluated, and the optimism that had fueled the EV boom was suddenly in doubt. The conversation shifted from growth and innovation to risk management and caution. The once bright future of EVs suddenly seemed a little less certain. Charging stations that were once bustling with activity saw fewer cars, and showrooms that had been filled with eager customers now seemed quieter. The vision of a future dominated by electric vehicles was still there, but it was now clouded by uncertainty and doubt. This single event had the potential to reshape the entire landscape of the electric car revolution. Factories around the world, once buzzing with activity, faced the prospect of slowdowns. Industry conventions, which had been showcases of innovation and progress, now saw fewer attendees and a more cautious atmosphere. The ripple effects of Tesla's stock plunge were far-reaching, and the full impact was yet to be seen. One factor that couldn't be ignored was Elon Musk's increasingly vocal presence in the political arena. While his outspoken nature had always been a part of his public persona, his recent pronouncements had taken a decidedly partisan turn. This shift had alienated some consumers and investors, particularly in international markets. Musk's foray into politics, once seen as a quirky side note, had become a liability for Tesla. His pronouncements on social media, often inflammatory and divisive, were now being viewed through the lens of his company's brand. The global nature of Tesla's business meant that Musk's words now carried significant weight. His political views, once easily dismissed as personal opinions, were now being interpreted as representative of the company he led. This entanglement of personal politics and corporate identity would have far-reaching consequences for Tesla's future. Section 4. The Dragon's Rise, Chinese EVs hit the gas. In recent years, the landscape of the global electric vehicle market has been undergoing a seismic shift. The once clear dominance of Western automakers, particularly Tesla, is now being challenged by a formidable new player from the East. While Musk grappled with the fallout from his political pronouncements, a new threat was emerging from the East. The Chinese electric vehicle industry, once seen as a distant follower, was now accelerating at an unprecedented pace. Chinese EV manufacturers, once considered lagging behind their Western counterparts, were rapidly catching up. Factories buzzed with activity, assembly lines churned out vehicles with remarkable efficiency, and engineers worked tirelessly to innovate and improve. Companies like BYD, NIO, and Xpeng were releasing compelling electric vehicles at competitive prices, challenging Tesla's dominance in the world's largest auto market. These brands were not just producing cars, they were crafting a new narrative of technological prowess and affordability. The showrooms were bustling with activity as consumers flocked to see the latest models. The streets of major Chinese cities were increasingly filled with these sleek, modern vehicles, a testament to their growing popularity. The competitive pricing and advanced features of these cars made them an attractive option for a wide range of consumers. The Chinese government, eager to establish itself as a leader in the clean energy revolution, had poured billions into supporting its domestic EV industry. This support came in various forms, from subsidies and tax incentives to investments in infrastructure and research and development. This investment was paying off as Chinese automakers were rapidly closing the technology gap with Tesla. Innovations in battery technology, autonomous driving, and energy efficiency were becoming hallmarks of Chinese EVs. Engineers and scientists were pushing the boundaries of what was possible, ensuring that these vehicles were not just affordable but also cutting edge. Chinese consumers, increasingly environmentally conscious and patriotic, were gravitating towards these homegrown brands. The younger generation in particular saw these vehicles as a way to contribute to a cleaner environment while also supporting their national industry. Charging stations were becoming a common sight, making the transition to electric vehicles even more convenient. Tesla, once seen as the undisputed leader in the EV space, was now facing stiff competition in its most crucial market. The company had to innovate continuously and adapt to the rapidly changing landscape to maintain its position. The presence of Tesla in China was still strong, but the gap was narrowing. The battle for the future of electric mobility was no longer a one-horse race. It was a dynamic, fast-paced competition with multiple players vying for the top spot. The rise of Chinese EVs signaled a new era in the automotive industry, one where innovation, affordability, and sustainability would drive the market forward. The world was watching closely as the dragon roared to life, reshaping the future of transportation. Section 5. Trade wars and tariffs, a wrench in the gears. Adding to Tesla's woes were the lingering effects of the trade war between the United States and China. Tariffs imposed by the Trump administration had driven up the cost of Chinese-made components, impacting Tesla's production costs and profitability. These tariffs, initially intended to protect American jobs, had inadvertently hampered the growth of one of the country's most innovative companies. The trade war created a climate of uncertainty and instability, making it difficult for companies like Tesla to plan for the future. The tariffs, while intended to punish China, had unintended consequences for American businesses and consumers alike. The trade war highlighted the interconnectedness of the global economy and the ripple effects of protectionist policies. Tesla, caught in the crossfire, was forced to navigate a complex web of tariffs and trade barriers, adding another layer of complexity to its already challenging situation.